Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Electric vehicle stocks have really bounced back over the last couple of weeks. Tesla is rising. We've seen the return of stocks like Lucid and Rivian that have once again become hot in the market. Even some of the charging stocks have gotten hot. But I think we're at a point in the electric vehicle market's evolution where investors need to be a little bit cautious about what's going on in the industry. And there's a case study from a little over a decade ago that I think we all need to learn at least a little something from, and that's what happened with the solar industry. Here's another industry that was growing extremely rapidly, great margins, seemed like these companies were going to be growing forever, and then suddenly there was a collapse in the industry. What these industries have in common is that they're serving a lot of the same markets, renewable energy, electric vehicles. They're also manufacturing businesses. And the thing that I think ties them together is China has come in very aggressively with new and innovative products that are starting to lower prices in the marketplace. Now, we haven't seen Chinese electric vehicles make their way in big numbers to the US yet, but they are starting to be exported around the world. And everything we've heard is that they're really good products. So I want to show the example of what happened with the solar industry, because this is an industry I've covered for a long time, and then tell a little bit about why this is something we can learn from in electric vehicles. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube and don't forget to subscribe to my newsletter in the show notes. I want to start with a couple of charts. And this is a chart of First Solar and SunPower stock prices in 2007. Now, this is before the Great Recession, but you can see that this is when these companies really sort of hit the map. First Solar in particular, stock was up almost 1,000% during the year in 2027. Both of these companies at that time were primarily manufacturing companies. So they were making solar panels and then selling them to installers who would put them on roofs or in solar farms in large fields. This is really where the industry got going. But fast forward to not only 2008, but all the way through 2015. And what do you have? Both of these companies drop over 80%. And by the way, these are two of the best companies in the solar industry. There were dozens of companies that went bankrupt over this time. What happened was manufacturers in China started to increase supply really rapidly. Prices for solar panels came down. Volumes didn't make up for the reduction in prices and margins. And eventually, the money that was invested in building out those manufacturing plants just couldn't be recouped with profits from the product they were actually selling. That's what's common here with electric vehicle companies. It's costing these companies billions and billions of dollars to build out manufacturing plants. But if you're going to build a plant, then you need to make product that you can sell profitably to actually be a going concern as a business. Tesla has done that extremely well, has better margins than anybody else in the auto industry. Guess what? First Solar also had margins in excess of 50% back in 2007, 2008. So sometimes these manufacturing advantages don't last. The biggest commonality that I'm seeing between the solar industry in the late 2000s, early 2010s, and the electric vehicle industry today is that we're starting to see price wars. Back in the solar industry, it was just a commonly known fact that prices were going to continue to come down. Part of that is because manufacturing costs were coming down at a really rapid rate, but supply was increasing faster than demand was increasing. As a result, companies had to compete based on price. What are we seeing in the electric vehicle industry today? Everybody's building out new supply, whether you're talking about a legacy automaker, whether you're talking about Tesla, Lucid, Rivian, all of them are increasing supply at a really rapid rate. We have seen plenty of signs that reservations, backlog, everything is dropping. Demand is not filling the supply that's hitting the market right now. And as a result, prices are starting to come down. We've already seen 3 straight quarters of Tesla's margins coming down. And that's really the only established manufacturer in the EV space. Everybody else is just burning through money trying to get their plants up and operational. So if you're in EV stocks, I just want you to take this as a cautionary tale. Sometimes growth isn't all it's cracked up to be, especially when competition starts coming into the market. And in particular, I would be a little bit concerned about low cost, high quality competition coming from China specifically, because that's what really crushed the US solar industry. And even a lot of those Chinese manufacturers didn't survive. History often doesn't repeat itself, but it often rhymes. I think there's a lot of similarities here. But what do you think? Leave your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.